Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Hey, this is a quick stock market update show that we do every day. We call it the Closing Beat. We're here with Jazz Wealth Managers. We're financial advisors with a little bit of an offbeat sort of tone, and we like to teach, of course. I just got some bad news, actually. I don't know how to think of this. I was told by my daughter I cannot be Louis Armstrong for Halloween. She said, "What are you going to be for Halloween?" I said, "I want to be Louis Armstrong. I got the trumpet back there. Look it, it's over there. I get the whole setup. I have a pretty good Louis Armstrong voice. I'll spare you today." But she said, "You can't. You're not allowed to paint your face like that." I don't know. I guess I avoided disaster there from what I was told. Anyways, let's talk about the good in the stock market here today. Let me know, what are you going to be for Halloween? I got a special treat for you guys for Halloween, and it's not Louis Armstrong. We'll keep it straight, but let me know, what are you going to be for Halloween if you're even doing that this year? To the right-hand side of your screen, you can see the stock market performance for the day. And before we get to that, if you want to play a game, it's called Guess the Dow. You can come and join us. Go to the website, jazzwealth.com/guess the Dow, and tell me where you think the Dow is going to close next week. If you're the closest without going over, we'll send you a $100 gift card. If you're one of our customers, like our winner last week, Jerry Lou, we'll credit your account $100. Even if you have an IRA or Roth, it can go in there, and it doesn't count towards your contribution. So play along if you like, and no strings attached, right? Doesn't matter. Just play the game. Let us know how you did. Okay, here we go. Let's take a look at the stock market. To the right-hand side of your screen, got a little bit of a down day. Is that a big deal? Not really a big deal, right? We talked about this yesterday. The stock market's had a great move higher here in the last sort of couple weeks, moving higher. Here's the S&P, especially over the last 4 days. Really good. Back to double-digit gains on the year, and we just floated back a little bit today. Totally cool. It's like throwing a ball in the air. You know it's got to fall at some point. Doesn't mean when it falls it's going to create disaster there. Speaking of that, we got the 10% gains, roughly. We're just under 10% here on the S&P today. If you're looking at the S&P, Apple was your biggest drag today, and you know why. If you watch yesterday's show, we said, hey, when they have an iPhone announcement the day of, it's typically lower. 4 of 15 times when they announced new iPhones, 15 of them, believe it or not, it was the only times that the stock was higher. Only 4 of 15 times. Well, today we're going to make that 4 of 16 because the iPhone announcement did come out today. We won't get into all those details, whether you love it or not, or like the new editions and 5G and all that, but the stock was lower, and so you've got to know these stats right here. So when we try to talk about them ahead of time so you know what to expect, because that's half the battle. Looking at cruise lines today, they were one of the weaker spots as well. Royal Caribbean got all the headlines today because they are raising more debt. They are diluting you as shareholders, and they're going to raise some debt as well. I believe $1 billion. They're burning $300 million a year, so they needed the $300 million a month. I'm sorry, $300 million a month. And so the cruise lines were weak today, no matter where you look. If you're looking at Carnival Cruise, Norwegian Cruise, all a little bit lower on the day. If we look at the S&P today, volume was below average. Volume is such a key indicator in the stock market, especially as we end the highs of recent uptrends or quick little moves there. When the volume starts to dry off a little bit, and you typically see a little bit of a floating back there. It's also earnings season. Earnings season really officially kicked off today. You got 7 names that reported earnings today. Of those 7 names, they all fell. So every one of them was lower, the major names that reported. You got a median loss between all 7 of them of 2.2%. And if we go over to the charts, I think you'll see Citigroup was the worst out of all of them, down basically 5% on the day there. Citigroup was the worst. Now, if I take you just for a second of expectations for earnings season, because we're going to talk a lot about it here, we always do during earnings season. Analysts, what they do is they revise their expectations leading into earnings season, meaning they either revise expectations up, they expect more out of the companies, or revise them lower. Well, if you break it down by sector, real estate has the most number of analyst revisions lower, right? So they've lowered the bar. Think of it that way. Basic materials, they've raised the bar the most out of every sector. So there's your sort of dissection there. And that's what you have going on with the S&P. We're going to talk a lot about it, so we won't go into a whole mess today. The Nasdaq pulling back just a little bit, had quite a few moments where it was positive on the day. But ultimately floated back down, just down a little bit as it wraps up everything. Apple was the main drag overall there. As I showed you, the stock was already a little bit lower. You've got to know this data of anything that you're trading or investing in. That was such an important thing when it comes down to talking about Apple's performance on iPhone Day. If you knew that today was supposed to be lower, then you really didn't have any overreaction. You didn't panic today. You maybe didn't buy anything Apple related or stock-wise. but you knew not to overreact to that. Well, there's one other thing I want to share with you, and that's the Nasdaq. You know, the Nasdaq is up over 10% in a month. Is that normal, right? Did a whole episode on, is that odd, right? Ask yourself when things are odd. Well, let's take a look here. Here is every single month where is in the history of the Nasdaq where it's been up 10% or more. So on the left-hand side, you've got every month greater than a 10% gain. So for example, August, we had 10.94%. Right? And actually, it's backwards. You got to shift all these down one because it's the following month. We'll talk about it. So anyways, you've got 10% gains here. The best, 1999, 23%. The worst was technically 10, just basically right at 10%. So you can see that out of all the months since 1999 in the stock market's history for the Nasdaq, it's not common. Only 19 months did it find itself higher than 10%. What we then did is we looked forward and said, is that a good thing or bad thing? When it's up 10%, does it hold up there or does it start to pull back? Well, look at all of the following months' performance there. You got a lot of red on the screen. The worst was down 26% after only gaining 10. The best was 23% after gaining 12. The average is less than 1%. And it's basically a coin flip whether the next month is going to be positive or not. So it's not one of those exciting stats you want to see. In other words, the Nasdaq being up 10% is not normal. We're going to expand on this and actually show how many times it was up 10% before the month ended and then floated back, just to zoom in a little bit more. But the bottom line with the Nasdaq is this is kind of odd. And so if the Nasdaq pulls back, a lot of these tech stocks start to pull back in here. Let's go over to the Nasdaq. If that happens, it's not a big deal. It's actually perfectly normal and would be expected. If it does nothing, plus or minus 1%, that's also pretty normal in that same respect as well. Taking a look at the Nasdaq today, financials were the weak spot. No, I'm sorry. We're going to go to the Russell. That was the Russell I want to say. Russell 2000 pulling back. That's actually tied for the Nasdaq in terms of 1 month performance. They're up the same amount. So the Russell 2000 has been killing it. Today it pulls back a little bit. That is totally okay. Financials were the weak spot because a lot of the financial earnings came out today and that did hurt them. Dillard's I thought was interesting. Yesterday up 20-something percent or 18%. Today it almost gives back all of it. Why is that? Well, we talked about it yesterday on the show. Warren Buffett didn't buy the stock. It was a fund manager of Berkshire Hathaway that actually just had a position in it. He just took his own personal position there. And I think when people read those headlines, all of a sudden we started falling back there just a little bit. Hey, on the bottom right-hand side of your screen, we have some great videos for you. FinTips series. It's a playlist that we have on YouTube. Really short, simple financial tips there for you. Yesterday we did dividend stocks ranked by volatility. In terms of the talking about how to put together a dividend portfolio, ranking them with volatility, and then comparing the performance there. A little geeky. I always start Mondays off a little geeky. Tomorrow we've got a great video on should you refinance or not, and not just the general YouTuber sort of answer to, well, you have some things to consider. We actually quantify one specific scenario to go through whether this person should refinance their house or continue the path that they're on, or maybe something different. So really, really interesting one there. You know I like to take it a little bit further than most people. And then on Friday, we're going to talk about tax-free Roth conversions. Can you do a tax-free Roth conversion? Well, this year you may be able to do that. So I'm going to explain that for you as well. On our research site, we expanded on Monday's video a little bit. And then Cody's got a post coming out tomorrow for our research site. The one indicator that has accurately predicted the winner of the elections, right? Going back, we show all the data there for you. And so we'll show who is, according to this one indication, which is very common, you can do it too. Do you like who is projected to win the election or not? So we're going to have a little fun with that one there. Our research site, jazzwealth.com/research, or go to our website up at the top page there. If you can't join us here, you just want to pay, it's $13 a month, I believe, and a lot of cool stuff there. A lot of great research for you on that one there. Also, if you want to chat, you can chat with us. jazzwealth.com. You could choose contact or chat with Jazz. And we can help see if you're a good fit. A lot of times I make those phone calls, and so I'm happy to help if you think we need some help there. And more questions on the Robinhood thing, by the way. I can't answer that. I don't know what's going on with Robinhood. I see it's not good news. People are getting hacked and losing a lot of money there. I don't know. I'm sorry. I usually like to look into things like that, but I have no idea. All right, going over to our sector breakdown here for the day. Just a few things for you. We're going to keep this segment short. You could see on the right-hand side of your screen how things are performing. Consumer discretionary, staples, and communication services were the only areas that were higher today, but only by just a little bit. I'm going to start with financials because they had their earnings today. We'll go over to JP Morgan, down on the day 1.6%. I got to admit, I was wrong. We went over all the stats yesterday on JP Morgan, and I said, even though, right here was the thing we showed, even though they are only positive 26% of the time, and this is the worst quarter for them to be positive on earnings day, right in here, JP Morgan actually followed the stats. So I went outside of it. That just shows you've got to follow the stats there. I would have lost on that one had I made a sizable wager there, but the stock was actually lower on earnings. They did beat on earnings, by the way. Beat by 68 cents. Revenues came in better than expected. Both JP Morgan and Citigroup were very cautious on forward outlooks there and some of their loan loss provisions, and so that dragged down the sector today. If you look at the financials there, just starting to get back into chop zone. We don't like to see that. Consumer discretionary. How about that? Just almost hitting new highs here today. It's largely going to be because just a few names there. Amazon initially helped it out. It actually finished up stronger today by just a couple cents compared to the market, so looking pretty good there. I believe Lowe's broke out, or not broke out, but it hit new 52-week highs, up 1.5%. With that, you can imagine Home Depot went along for the ride as well, and it did. Lowe's continues to outperform Home Depot, by the way. And then lastly, you got McDonald's, right, showing a 0.5% strength on the day. Where the markets were down. Also one of the better performers in the Dow. Want to take a look at gold real quick. Lost $34 on the day. That's a sharp reversal for the price of gold. And you can look at silver as well. If you look at the price of silver, down 3.6% on the day. So that stuck out just a little bit. And we're going to take you overseas real quick. Asher. This is the Chinese A shares, which are basically the 300 largest stocks in Shanghai and Shenzhen, the two stock exchanges there if you want to participate. Think of it kind of like our S&P 500, if you will. It's not exact, but there's what you got there. So look, you got the breakout here, and the big reason for that is tech. Just like in our markets, the big reason for markets moving higher is tech. If you want to look at Chinese tech, you're going to use CQQQ as the ticker symbol there. That is also sitting at new highs. So the Chinese market, especially the Chinese tech market, is just slightly beating the Nasdaq at the moment. Actually, a little bit better performance there. Now, if you look at if you look at the A shares there, tech makes up about 20% of the A shares there. It's kind of similar to the S&P 500, but the S&P 500 is made up of 25%. So it gives you an idea of how their market is very similar to ours. We've had a lot more Chinese viewers lately, and I have a long history with them teaching them about the U.S. market. So I just wanted to include a little bit of that today for you and kind of touch on it. All right, we'll go over to our new highs and new lows for the day. You've got 39 new highs. Looks like one new low on the day. Actually, the new low is going to be Vontier. So this is the new addition to the S&P 500, and it's not going so well for them right now. Down another 3% on the day, making new lows in the process there. A couple of the new highs I'll point out to you that look a little extended, right? So I've tried to mention like Cintas and things like that. Just a little bit extended. Tyler Technology is going to be one of them, ticker symbol TYL. It's had a great run in the short term here. You expect to see that start to pull back a little bit. I'll add T-Mobile onto the mix as well. Tried to continue its little breakout move here today, and it floated back. You're left with like a little topping tail if you're a technical trader there. Not good, and you also had about average volume. That's not good either. If you had average volume and the stock didn't move, you'd say, okay, not bad, right? We're going to continue this momentum. Average volume where the stock moves up and then floats back down, not such a good sign. That indicates a little bit of short selling there maybe. You got BlackRock, also a touch extended here. They had earnings today. The stock, no, was it today? It might have been yesterday. Stock was higher by 4% on the day there. Just a little extended. This stock especially does not like to be extended in the short term. And Paycom, this was one of the other ones I mentioned the other day. Hey, it did finish positive on the day. It hasn't quite put in a top just yet, but very extended in the short term. You got to be careful here. Not a time that, in my opinion, not a time you would start a new position. You would maybe just hold what you have or consider taking a little bit of profit taking. Okay, let's do the watch list here. So here is the watch list, and typically what I do is I share a little bit of information here, and then I post the rest of the more geeky detailed stuff on our research site. And from every now and then, usually once a week or so, I say, well, that's not fair. I'm always telling you guys, join us here at Jazz, join the research site. If you don't want to join us at Jazz, I feel bad. So occasionally what I do is I just share everything with you, right? So you get an idea of what we talk about. What we're going to talk about is a list of upcoming stocks that are getting ready to report earnings, and we're going to talk about a few different metrics that I promise you will not likely see anywhere else. You can also check out the rest of this on the research site. I hope you join us, all that great stuff. Marketing pitch, blah, blah, blah. All right, here we go. Let's make this a little bit bigger. It's big enough, right? You could see that. Someone will let me know if it's not too good. Okay, here is a list of all of the financials reporting earnings for the rest of this week, so you just have something to look at. The idea here is not to tell you to go out and buy one of these or sell one of these ahead of earnings or anything. It's just to let you know what to expect if you in fact own one of these stocks going into earnings. What's good, what's bad? Let's take a look. So in the first column here, you got the ticker symbol. We got the name in case you don't know who they are. We got the earnings date, and they're only arranged by stocks reporting this week. So we also put the time of day, whether it's a morning or afternoon. So you would know, like, for example, First Financial on the 15th after the markets close. PM would just be in the afternoon there. Then we put the history, the number of reports that we're looking back. So in this case, Bank of America, we're looking back 76 quarters. So you know there's a lot of data there. If you're looking at Truist, we're only looking back 3. And so that's not very good. It's not a lot of data to come up with the fact that they've beat 100% of the time on earnings. It's not a lot of data. Anyways, earnings beat rate. So this is in a percentage terms here. So Bank of America beats 76% of the time, their revenue 56% of the time, and all that great stuff. These two columns are color-coded by the top 5 and the bottom 5. So in other words, the best performer here is Truist, but the data is kind of limited there. You got Western Alliance, you've got Goldman Sachs in the mix, Signature Bank, and who else was that's it. Oh, yeah, I got CMB. So they report as well. And then we have the same thing over here, and we have the bottom performers in terms of those who miss quite often there. Naturally, ones that have little to no data there are going to show lower numbers, but you get the drift what we're talking about here. So, for example, Wells Fargo is not in the top 5 or even in the top 10 of stocks that tend to beat on earnings. They have a very low success rate there. Then we've got guidance. Most banks don't release guidance, so you're not going to see anything there. We talk about the average gap on earnings. So when they report earnings, the next available time, so if they report in the morning, then when the stock market opens, how high or low is the average gap? So you want to know if there's something extreme you want to take a look at. For example, down here, State Street tends to average a pretty substantial gap down. You just want to know that if you own the stock. And Citizens averages a pretty nice gap higher, so something to look at. Morgan Stanley as well. All right, then we took a look and said, okay, from the open to the close, so not factoring in the gap, from the open to the close, what happens? I'll explain why that's important in just a second. It seems like overkill, but we'll talk about that. Then we talked about their average gain for the day, right? Just including everything. What's the average performance just from the gap to the close? What happened there? And then I also put in volatility. You guys know I like my volatility. I like to put that in there. And very quickly, you could just see that something like State Street tends to be the most volatile stock out there. U.S. Bank, Washington Federal, some of these stocks are less volatile on actual earnings day. Okay, here's what I want to point out today for you. I'll go over a couple stocks on the list, and I'm going to go over something kind of interesting here. Bank of America. So up at the top here, you got Bank of America. This stock tends to bleed off the most throughout the day. In other words, its average move is to start lower and then finish lower. So for example, the average gap is just a slight gap down. But throughout the day, the selling pressure tends to continue. It averages a decline of almost 1% throughout the rest of the day. So I thought that was kind of interesting. You've got Citizens Financial Group down here at the bottom. This tends to it has the highest beat rate with the most amount of data. It's not a lot, but it's still there. But it also tends to bleed off. It's got this nice gap to start the day, but it typically doesn't finish higher than that. So basically, when the market's open, if you haven't already owned it, you're missing out. You didn't get that juice in the stock there. It tends to bleed back, but still posts a positive gain on the day. Goldman Sachs has the most consistent history in terms of beating on earnings and beating on revenue. However, it tends to be the flattest as well, and that's because we all kind of know that they're magicians at perfectly getting what Wall Street is expecting. It's a very, very analytical stock that typically doesn't have very many surprises there. State Street, already mentioned this. State Street is the most volatile stock in terms of earnings average there, down about 1% on the day. So you got a lot of volatility for not a lot of return. If we saw that there was some big average return, you'd be willing to accept that extra volatility there. I would anyways. CNB, here we go. This is the least volatile out of the group, but has extremely limited history here, so it's kind of difficult. And also, if you look at this stock here, they're widely expected to report a decline in earnings there. So it's not supposed to be a good earnings. That raises the question, is that already priced in or not? So kind of a tough one there. All right, looking up here at Wells Fargo, it's a kind of a coin flip on earnings, right? They beat only 51% of the time, so not really good there. Kind of also a coin flip on revenue as well, but it still averages a slight gain, just a small gain there, and a lot of people think that may still be the case. I'm sorry, I'm up here, because a lot of the bad news is kind of factored in with that. How much worse can it get for them, right? I mean, that's a tough one there. Also tends to recover from any gap down. So if you happen to see this stock gap down a little bit, you wouldn't think that it's the end of the world. This quarter could be different, but you say, all right, I typically tends to find at least a little buying pressure there. And if you think about Wells Fargo, if it gaps down, I mean, how much further can it fall? You're going to have people that are interested in buying that dip there. Okay, and then lastly, we've got Morgan Stanley, right? So we'll go over to Morgan Stanley here, right where the cursor's at. Averages about a 1% gain reaction to earnings there, but most of the time the action comes on the gap. So look at this column here versus the average full day. So it gaps up 1.08% on average, right? You can't see me. 1.08% on average, floats back just a little bit and averages a slight gain there on the day. But all the excitement comes on the gap, typically for Morgan Stanley. Of course, every quarter is subject to change. But here's just a way to take a whole bunch of data and say, what am I supposed to do with it? What can I learn from it? What can I expect? And so I tried to put as much as I could on there. Hopefully it wasn't too much. Let me know what you think about this sort of watch list here. And I've covered all of them on the right-hand side of your screen. And I hope you enjoyed there. So also you could check out our research site if you want to learn more about things like this. This is a bit short term, but typically we do more mid to long term stuff in terms of giving data, research, and things, and little fun every now and then. All right, yeah, that's all I have for that. Perfect. Okay, let's go over to stocks in the news. What do we have today? Well, I already talked about Royal Caribbean. So Royal Caribbean, they're offering a bunch of debt there, $1 billion in debt and stock. They burn $300 million a month. You think you've gone through some issues there, but can you imagine that, trying to man that battleship? Anyways, Disney higher by 3% on the day. I love it. Disney is going to reorganize their company in general, focus more on streaming. We covered this yesterday. The stock price reaction is today so that you can take a look. Tesla, kind of hinting that it wants to move higher. I give it to you. I mean, it's like every time it dips even just a little bit, it gets soaked back up again. And Tesla actually ranks as now the most widely held stock by brokerage accounts in the entire world. As far as U.S. investors go. So if you're investing in the U.S. and you have global stocks, that's fine. But Tesla ranks as the highest, overtaking Apple, actually. So it is the most widely held stock out of all of them there. And yet they're not in the S&P. Anyways, they're in the news today because they're going to lower the price of their Model 5 in China by another 3%, I think. I think it was 3% there. Anyways, you got Williams-Sonoma breaking out to new highs there. Very expensive stuff that you buy at their stores just to cook. Williams-Sonoma raised their dividend by 10%. They're restarting their dividend share buyback program there. Their dividend now goes from 48 cents to 53 cents. I think they got about 500 million to go in terms of share buybacks. You're seeing those wake up. So I'm just pointing them out little by little. It's not the most exciting news, but I like to point that out. And then Fastenal was one of the earnings that reported today, lost about 5%. So actually this one did worse than Citigroup by the end of the day. You see the gap down here on earnings there. Earnings came in as expected. Revenues came in as expected. Little bit of a cautious outlook going forward. I think a downgrade or two on the day. And those are your stocks in the news for the day. If you have any questions, feel free to post your questions now. We'll let the stream catch up. I've got a few more things to mention, and then I'll take your questions. Tomorrow, you've already seen a list of stocks from the banking sector that are reporting: Bank of America, Goldman Sachs, PNC Bank, Progressive, US Bank, Wells Fargo, and that'll do. You've also got earnings from United Healthcare, Alcoa, Sleep Number, and United Airlines reporting tomorrow, expecting to be a wild loss for United Airlines. We'll see what happens there. The Fed is also out in force. There is 5 different Fed members speaking just tomorrow. That's above average, by the way. And then dividends, you got AbbVie paying out $1.18, Buckle paying out 30 cents, and Abbott Labs paying out 36 cents. And remember, you've got Keurig joining the Nasdaq next week. They are joining the Nasdaq, taking the place of, who are they taking the place of? They got to take the place of somebody. Western Digital. So they're taking the place of Western Digital there. Keurig Dr. Pepper coming into the old Nasdaq 100. It's a tech stock, right? All right, I'll take your questions if I can find them here and see what we can do. Boeing, yeah, kind of a weak day for Boeing. They had no new 737 sales there. Not good news for them, but a little bit of a down move. It's obviously been worse, but yeah, not a good day for them. Disney's on a tear since I cheered them on there. That's right. That's right. Disney is busier than ever, by the way. I'm not saying busier than ever. They are busy. Long lines over there, lots of bookings, and they're not fully open. I get it, but yeah, they're coming back. Don't worry about it. Johnson & Johnson in the news for a couple reasons today. They did beat on earnings by 20-something cents. They were one of the only ones that raised guidance, I believe. They did raise guidance. So earnings there. Johnson & Johnson just a little bit lower. Overnight last night, they had to, they're not stopping altogether. I believe the word was they temporarily are just halting their COVID vaccine there because they said one person got ill, then they said two, then they went back to one. Yeah. So maybe not the vaccine that we're all going to be interested in there. We'll see what happens. Hey, Jazz. Hey, Santoshi. Can you do a watch list for future what? Future what? We do tend to look in the future as we did today, but you might have meant to type something else. Future, what are we looking at there? All right. You put 900. You have to put 900 a check for the rest of the year, and you're 457 to lower your income and avoid paying taxes. You think I should hold off because the market is so high? Okay, I see what you're saying. You got to put 900 every paycheck to get into the lower tax bracket. Well, I guess it depends on where you think the tax system is going to go, and that's largely based on the election. If you're trying to lower your taxable income, then I wouldn't worry about a month and a half, 2 months worth of stock market performance to try to time that. I would just go for it, put the money in there. You can always hold off, come back next year when the markets fall, put a little bit more in there. So my general answer is I would go for it. I wouldn't use just 2 months of time in your whole lifespan of retiring and retirement to avoid or to not avoid potential taxes there. So I would go for the tax break. Yep. I love it. Consider Chet Baker. Well, yep, I could do Chet Baker. That's true. I have to fix my mouth a little bit. He had an unfortunate sort of ending to his life, but yeah, that's kind of how I play the trumpet too. It sounds a little bit airy. I play that thing every now and then. You know, I mean, I blow air through it. I don't know what really happens there, but we'll see. You got QCOM on the dip, hoping for a breakout to all-time highs, taking your profits and dipping out of that thing. Well, you did. You hit all-time highs today. So does that mean you took your profits or just waiting for another move higher? It's a good sign today. Got a good strong stock in a sector that's a little overheated, but yet this one keeps plowing ahead there. I like that. I like it out. I like it. You like the long-term value of your casinos. That's one way to put it. Yeah. I mean, you're playing with a news-driven area right now, so you're kind of opening yourself up to that. As long as you're not going full force in this area, that's fine. I can't blame anybody for wanting to take a shot there. Not at all. Yeah. If you have a few thousand this year for a Roth, are we able to put in any time? Would you recommend waiting until the election since we're so close? Well, there's no limits on that. I think what you're saying is, can I put money in a Roth at any time? Absolutely. You can do lump sum investing, things like that. Yeah. You don't have to, if you're saying you want to kind of time it. Yeah, there's no rules on that. Oh, there's a question. Can you do, watch list on futures? Yep. Oftentimes when I'm sharing the charts with you here, I am actually looking at the futures. I like to look at that in terms of market performance. So when I talk about the S&P, the Nasdaq, Dow, and things like that, I'm looking at the futures. When we look at gold, looking at gold futures. When we look at oil, looking at oil futures. And if we ever go to bonds or VIX, I'm also using that as well. Watch list, though, I'm not sure what you mean unless it has to do with some sort of performance there. They're also a little bit trickier to pull data on because they're rolling contracts. So from a pure E-mini standpoint, if you're looking at that, it's very difficult for us anyways to pull that kind of data. Yep. I love it. What are the best performance in times like earnings and events? In terms of futures there? Yeah. Well, that's one. Yeah, that's a good idea. We could probably do that, no problem, because then we'd be focused on one individual futures contract. We wouldn't be trying to go, factor in rolls and everything. So that could probably be done. Andrew says, Bitcoin, baby. It's time. Pull it up, Bitcoin. Well, it's down today. Down 1.2% today. You've got a steady uptrend there. I totally buy that. Everything looking good in the short term. It's highly volatile, but I don't look at Bitcoin often. Bitcoin futures, if we ever do, just to look at something a little more true. But if you own it, I will cheer you on, man. I hope you get it. Don't forget to factor that in your taxes. The IRS is looking at that now. They're done playing games with the old crypto people. They are coming after people left and right there. Yep. I love it. He's saying you can contribute a few thousand more to the Roth this year, and you can now if you want, but he's asking if you should wait till after the election since it's so close. Well, we shared stats on that. There is no point in time where an election, no matter who wins or loses to a party, if it happens to be a change in parties, causes the stock market to sell off like in 2 days or something, right? There is certainly negative performance, but the average move is actually higher and the median move is actually higher as well. So a lot of times these fears of elections, especially if you feel like the parties are going to change, people think, oh man, the market's going to freak out. This case is a little bit different because we know what to, Trump right now, what to expect with him in terms of Wall Street and Biden. If Wall Street or the algorithms is following the polls, then they're already pricing in a Biden win, and Wall Street's pretty much cool with that. And actually, give you guys a little inside note, Joe Biden's campaign has been going to Wall Street looking for their support. And Wall Street has fought back saying, how can we support a guy that wants to put transaction tax on us? They want to raise income on pretty much everybody that works on Wall Street. Why would we support you? And you know what the Biden's campaign response has been? Directly to names like Goldman Sachs, people that we have direct communications with, their response, the Biden campaign's response has been, don't worry, that's just political talk. He has no intention of ruffling feathers and will not be doing any of this on day one at all in his campaign or in his presidency. That's a little shady, right? I mean, I'm sure every side does this, and we've seen this throughout history where people say, no, this is just for votes. But that's the exact wording that they're using, and everybody's sort of looking at that going, all right, well, then we can look at a Biden presidency as maybe something not to be scared of. But I don't know. I don't know what to say there. Yep. I love it. I'm going to wrap it up before you guys start slamming all the different political comments there. I don't care who you want to vote for. We can still be friends. All right. Have a great rest of your day. Thank you so much for watching. Hope you learned something today. That is the goal. Teach us something new. And if you like to work with a financial advisor that actually teaches, it'd be us, right? We just like to teach and keep expanding and learning different lessons, data, research, all that great stuff. Have a great rest of your day. Thank you so much for watching, and hit the subscribe button. It's free to do that. You just hit it.